Welcome to DebtCircle Key Roundups. I am Vijendra.
And I am Leela.
L&T Finance allotted 380 unsecured subordinated non-convertible debentures on July 1st, 2026, totaling Rs 380 crores. Each has a face value of Rs 1 crore and a tenor of 10 years, maturing July 1st, 2036. Interest payments of Rs 8,20,000 per debenture will be made annually every July, with the first on July 1st, 2027. Defaults trigger an additional 2% per annum interest over the coupon rate until resolved.
This 10-year issuance at a fixed coupon of 8.20% per annum adds significant long-term debt. Listing on the National Stock Exchange's negotiated trade reporting platform ensures transparency and liquidity for investors. The subordinated unsecured nature places these debentures lower in the capital structure, implying higher risk but potentially higher returns. The fixed coupon commitment stabilizes L&T Finance's cost of funds over the decade.
Banks reported FCNRB deposits hitting nearly $7 billion in June alone, driven by NRIs and family offices from Dubai, Singapore, and the US. They expect inflows to reach $50 billion within 45 days, assuming current incentives and interest rates stay stable. Despite this, fresh inflows dropped 86% to $946 million in fiscal year 26 due to higher US interest rates. Banks like Yes Bank and Equitas Small Finance Bank are raising FCNRB deposit rates, with Equitas offering the highest at 7.13%.
That's a clear sign of strong capital inflow momentum. The Reserve Bank of India's clarifications on loans and letters of credit against FCNRB deposits improved market confidence, pushing fresh inflows and inquiries significantly higher since mid-June. Operational improvements helped too. Dedicated FCNRB desks speed onboarding to 5 to 7 days, ensuring compliance. Plus, government bond inflows via the fully accessible route crossed $2.5 billion by June end, showing growing investor appetite for Indian debt.
On July 2nd, 2026, 24-carat gold in India surged by Rs 3,770 per 10 grams, reaching Rs 1,44,550, driven by easing inflation in the United States and reduced expectations of rate hikes. Similarly, 22-carat and 18-carat gold prices rose significantly, with 10 grams of 22-carat gold increasing by Rs 3,450, indicating broad-based buying across carat segments.
This surge reflects renewed investor confidence as the US Federal Reserve signals lowered market anxiety, boosting demand for precious metals despite some volatility on the multi-commodity exchange platform. Regional price variations showed Chennai and Coimbatore leading with higher rates, highlighting localized demand differences amid a global backdrop of rising gold and silver prices, driven by easing inflation and geopolitical factors.
The Indian rupee depreciated by 19 paise to 94.75 against the US dollar on July 1st, 2026. The main driver was the strong US dollar, with the dollar index at 100.34, up 0.15%. Geopolitical risks also played a role. Uncertainty in the US-Iran peace talks added a risk premium, while Brent crude oil futures rose to $73.23 per barrel, influenced by oil flow normalization through the Strait of Hormuz.
That US dollar strength reflects the Federal Reserve's cautious policy stance. It keeps pressure on emerging market currencies like the rupee, limiting its ability to appreciate despite domestic factors. Domestic markets showed resilience, with the Sensex up 182 points, but foreign institutional investors sold equities worth 2,556 crores on June 30th, indicating cautious sentiment amid fiscal deficit concerns.
GIFT City will showcase its growth as India's global financial hub at the vibrant Gujarat Summit on June 30th, highlighting banking assets of $111 billion and a fund management ecosystem with 217 entities managing $36 billion. Also notable is the growth in specialized sectors like aircraft and ship leasing, with 35 aircraft lessors and 36 ship lessors operating, managing over 370 aviation assets and 37 ships leased through the city's structures.
This underscores GIFT City's rising importance as an international financial services center, attracting global finance players and linking regional industries with worldwide markets, which could boost cross-border investments and financial services expansion in India. The presence of global and regional corporate treasury centers lending $5,610 million shows increasing use of GIFT City for treasury and cross-border financing, signaling a maturing ecosystem for international financial operations.
Bloomberg's committee meets mid-July to decide on including Indian government bonds in its global aggregate index, influenced by India's tax exemptions on interest and capital gains. This boosted the 10-year bond yield down by 0.26% to 6.74% recently. Foreign investors poured a record Rs 55,518 crores in June, helped by Reserve Bank of India adding long-tenured bonds to the fully accessible route. Goldman Sachs forecast $15 billion in inflows after inclusion, expected by mid-2026.
That's significant, Vijendra. Inclusion would attract passive inflows from global asset managers tracking over $70 trillion, reinforcing India's market. But if delayed, yields might rise by 0.10 to 0.12%, reversing gains. Plus, India's already in major emerging market indexes, boosting confidence. Regulatory changes encouraging Tata Sons public listing also favor bond issuances like Shapoorji Pallonji's Rs 25,500 crore secured bond, supporting asset monetization.
The Shapoorji Pallonji Group is issuing bonds worth Rs 25,500 crores, backed by their 18.37% stake in Tata Sons. These are zero-coupon unlisted unrated non-convertible debentures with a high coupon rate of 18.95% per annum. Recent Reserve Bank of India rules classify Tata Sons as an upper-layer non-banking financial company due to assets exceeding Rs 1,75,000 crores. This mandates public listing, increasing the likelihood of an IPO, which supports SP Group's monetization plans.
The bond repayment hinges on Tata Sons announcing an initial public offering or a settlement within 18 months. Plus, there's a covenant requiring repayment of at least Rs 13,500 crores in 2 years, offering investors some protection amid refinancing risks. Despite some internal resistance, senior Tata Sons figures favor the IPO, providing bond investors confidence in SP Group's ability to repay. The regulatory push makes the listing a strong possibility, which is critical for unlocking the value of SP Group's largest asset.
Spence raised $2.8 million in seed funding led by Arkham Ventures to expand its AI-driven asset-backed credit platform. They support over 200,000 active credit cards, issuing around 40,000 cards each month, covering nearly 8% of India's monthly credit card issuance. Their platform automates onboarding and servicing using agentic AI, enabling instant credit backed by fixed deposits, mutual funds, and equities, which enhances credit availability and efficiency for banks and customers.
That shows strong market validation. With 7 bank partners, including a major public sector bank, Spence's model addresses India's credit gap by converting existing assets into reusable credit lines, moving beyond traditional collateral loans. This approach aligns perfectly with India's evolving credit ecosystem, supporting safer asset-backed lending while helping financial institutions scale responsibly in a growing market.
The 10-year Indian government bond yield dropped to 6.73% due to strong foreign inflows exceeding $3 billion since June, facilitated by the fully accessible route, allowing unrestricted non-resident investment. Looking ahead, the government's upcoming debt auction for 34,000 crore rupees in 10-year bonds will be critical. A cutoff yield above current levels could raise borrowing costs and reverse the recent rally.
This inflow signals robust global confidence in Indian debt, likely lowering borrowing costs and enhancing market liquidity, especially as Brent crude prices stabilize near $71 per barrel, easing inflation pressures. Indeed, the auction's demand-to-supply ratio and global economic shifts will determine if the current bond market momentum, supported by foreign inflows and favorable oil prices, can be sustained amidst inflation and Reserve Bank of India policies.
The Reserve Bank of India told the parliamentary panel that virtual digital assets, including cryptocurrencies, pose serious risks to India's economy and should not be legalized now. They cited bans in China and Qatar and strict rules in Europe as examples. Meanwhile, the Institute of Chartered Accountants of India supports a clear legal framework and plans detailed research on virtual assets accounting and reporting. This aims to improve transparency and compliance in the financial sector.
This stance reflects concerns about illegal financing and monitoring challenges, especially with offshore entities. It signals a cautious regulatory environment, prioritizing national security and financial stability over rapid adoption. Their principle-based approach could guide future policy, balancing innovation with control. It shows industry readiness to work within regulations, contrasting with the central bank's current opposition to legalization.
HDB Financial Services has allotted 100,000 secured redeemable non-convertible debentures via private placement, raising a total of Rs 10,000 crores. Each debenture carries a fixed coupon rate of 7.8998% per annum with a tenure of 2 years and 11 months, maturing June 4, 2029. Interest payments are annual, scheduled on June 4 each year, with the final payment alongside principal redemption in 2029. The debentures are secured by a first and exclusive charge on present and future receivables, ensuring asset cover of at least one time the principal plus accumulated interest.
This significant issuance at a fixed coupon rate indicates HDB's focus on long-term funding. Listing on the wholesale debt market segment of BSE Limited will enhance liquidity and transparency for investors in these secured debentures. Such strong collateral backing reassures investors about credit risk, making these NCDs attractive for fixed income portfolios seeking security and steady returns over nearly 3 years.
Gold prices fell by 7.5% in the first half of 2026, marking their worst quarterly drop in 13 years, despite high geopolitical tensions like the US-Iran conflict. Technically, gold is in a short-term downtrend, but holding the psychological $4,000 per ounce level, breaking above $4,375, and the 200-day moving average near $4,480 is key for recovery.
That decline reflects a market correction after a historically strong year in 2025. For the second half of 2026, the World Gold Council sees balanced risks with prices likely trading within 5% of current levels. Support levels at $3,800, $3,600, and critically $3,450 could prevent further declines. Asian investor demand and central bank buying might drive prices back above $4,500.
HDFC Bank developed Neve, an in-house AI platform created by 150 to 200 engineers to automate operations and enhance fraud detection beyond typical fintech capabilities. They also built a real-time fraud detection system to analyze transactions instantly, blocking suspicious activities like money mule operations within microseconds without relying on third-party tools.
This shift to proprietary AI like Neve reflects the bank's strategic focus on technology, critical for staying competitive as digital transactions grow rapidly in Indian banking. Combining this with stricter KYC checks and integration with government fraud databases strengthens their defenses, making fraud prevention more proactive and comprehensive.
Aditya Birla Capital plans to raise Rs 6 billion through a subordinated bond reissue with a coupon rate of 8.0668%, maturing in April 2036, spanning 9 years and 10 months. The bonds carry a AAA rating from CRISIL. In comparison, NIIF Infrafinance issued bonds recently with slightly lower coupons around 7.8%, also AAA rated, showing competitive pricing in the infrastructure sector.